Accounting Lessons 2, Journal Entries, Explanations. So we'll first take a look at some of the basic definitions in bookkeeping and accounting. Bookkeeping and accounting. Some financial experts are of the opinion that bookkeeping is journalizing, which means making entries in the journal book, as well as posting, which means making entries from journal to a ledger book or ledger accounts. Everything else, including preparing trial balance and final accounts, profit and loss and balance sheet, etc., is part of accounting. So that is where they draw the distinction between bookkeeping and accounting. However, some financial experts do not make this distinction. Also, we should not forget that journal book is the book of original entry and ledger is the principal book, whereas cash book is both the journal and a ledger. Next, we'll go through the types of accounts in bookkeeping and accounting and the accounting rules which we follow. So here what we have is, we have personal account, where the rule applied for personal account is debit the receiver and credit the giver. For real account, we have to always debit what may come in and credit what goes out. For nominal account, we have to debit all expenses or loss and credit all incomes or gain. Now, to get a better idea about how it makes sense, we analyze the journal entries. Let us also examine some of the journal entries made in the book of accounts in John's Mercantile Store. So these are some of the journal entries made in John's Mercantile Store. Some of them actually. So here we can see that on 1st of January, there is a debit entry for cash account and credit entry for capital account for amount 3 lakh rupees. Since cash account is debited, it means cash accrue to the business, and since capital account is credited, it means credit the giver, who is capital account or personal account, which actually means John has started business with cash. That is the meaning of that. Now, on 5th of January, the journal entries made are of purchases account, there is a debit entry made, and for cash account, there is a credit entry made. So on 5th of January, purchases account, which is a nominal account, is debited, or an expense is recorded by way of purchases for amount rupees 1,500. And cash account is credited, which means cash, which is a real account where cash has gone out in the name of purchases to the extent of rupees 1,500, which actually means there is a purchase made by the business, there is goods purchased for cash. Let us now take the third transaction which is recorded, or the journal entry which is made, which is on the 7th of January, where there is a debit entry made against the cash account for rupees 2,000, and then there is a credit entry for sales account for rupees 2,000. What does this mean? Cash account is debited, which means cash is accrued or collected in the business for amount rupees 2,000. And this is by virtue of sales of goods, because sales account is credited. And sales account, which is a nominal account, is credited because or due to the fact that sales account, in sales account, there is an income recorded. So here this transaction means goods are sold for cash. That is, cash account is debited for rupees 2,000 and sales account is credited for rupees 2,000, which means sold goods for cash. On 9th of January, there is a debit entry in purchases account for rupees 3,000, and then there is a credit entry in Harry's account for rupees 3000. What does that mean? Purchases account is debited for rupees 3000, which would mean purchases, which is a nominal account, has encountered as an expense item rupees 3000. So from whom purchased is by looking at the credit entry, which is Harry's account, which is a personal account, which means Harry is giver. So this transaction means goods are purchased on credit from Harry. On 11th of January, there is a debit entry made in cash account for rupees 2500, and then there is a credit entry for 2500 on account of interest account. Now we have to see cash account is debited for rupees 2500, which means cash has come to the business on account of what? On account of interest account, because that account is credited. So interest account is credited and is having a credit entry, which means on account of interest account it is showing an income. So it means interest is received in cash. Cash account is a real account and interest account, is a nominal account. On 18th of January, the entries made are Harry's account is debited for rupees 500 and purchases return account is credited for rupees 500. What does this mean? Debit entry in Harry's account means Harry is the receiver of goods or goods worth on account of purchases returns account, which is credited, which means purchases returns shows a gain. Purchases return is normally used to record goods returned to supplier. Hence this means goods are returned to Harry, who is also a supplier. So this is how you analyze it, by taking into account the accounting equation as well as the different types of account which is mentioned in the journal entries. Thank you.